2025 is coming to a close, and if you're not already prepared for next year, you're behind. Today, we're going to walk through the top 10 things that you need to do in order to prepare your business for the end of the year. Before we get started, hi, my name is Jeremy. I run a bookkeeping and fractional CFO practice that helps mortgage, real estate, and insurance brokers build more profitable businesses by connecting your intuition with actual practical financial data. So let's get to it. Number 1, conduct a full financial performance review. If you're not already reviewing your financial performance every month, you need to change that today. Looking at your finances month to month allows you to spot trends, manage your cash flow, plan your sales pipeline, and take control of your business. Even if you've been keeping a close eye on your P&L each month, a financial performance review looking back at the year can be incredibly helpful. When you're taking a bird's eye view of the performance of your business, you're able to compare what you've done this year to what happened last year and connect any of the changes that you've made to things like marketing, networking, staffing, pricing, etc., and see how they made an impact. When reviewing your full year's financial information, drilling down into your revenue can also yield some unexpected insights. Looking at revenue concentration by things like referral partner, product types, service lines, etc., allows you to see your highest performing sales lines and can help you understand where you need to invest more or where you may be undercutting yourself. Now that you've taken a step back to review your overall financial performance and have a clear picture of where your business stands this year, it's time to roll up your sleeves and ensure your financial foundation is as solid as possible. Number 2, clean up the books and reconcile all your accounts. Accurate books are the bedrock of smart financial decisions. Ideally, this would have been something you've done every month throughout the year. So before you move forward into the next year, take this opportunity to reconcile every account on your books. Bank accounts, credit cards, payroll, commission accounts. Make sure every transaction is accounted for and categorized correctly. Outstanding transactions, whether they're a few months old or from earlier in the year, should be identified and resolved to avoid headaches down the line. Don't overlook those reimbursable expenses either. Appraisal fees, credit report charges, MLS dues, E&O insurance, each needs to be properly coded. Not only does this ensure you're reporting the right figures to lenders and advisors, but it also gives you peace of mind that nothing is slipping through the cracks. A clean set of books sets you up for success. It means more accurate financial reports, greater confidence when tax season comes around, and fewer surprises as you plan for growth in the coming year. With your books clean and accounts fully reconciled, you can make business decisions with confidence. Everything going forward is built on a solid, accurate foundation. Number 3, evaluate operational efficiency. Now, this one is going to force you to take a step back and have a hard look at how your business actually runs day to day. The end of the year is the perfect time to assess whether your core processes, closings, underwritings, renewals, claims processing, pipeline management, making sure those are running smoothly. Or if you're running into bottlenecks that could cost you productivity and money. Talk to your team about what's working and what isn't. Review your workflow step by step. Are there tasks that get bogged down? Are you still using manual solutions where automation could help? Take a close look at your tech stack and your subscriptions. Are you paying for duplicate or underused tools? Now's the time to consolidate and modernize. Finally, document and refine your standard operating procedures, or SOPs. Improving how your team communicates with clients, processes files, can save time, reduce errors, and set you up for a smoother, more efficient year ahead. After fine-tuning your operations, let's look forward to the financial realities of the next few months. Number 4, project cash flow for Q1 and Q2. One of the most common pitfalls for brokerages is getting caught off guard by slow seasons or unexpected expenses. To avoid this, take a proactive approach by mapping out your cash flow for the first 2 quarters of the new year. Start by listing known upcoming expenses like licensing renewals, conference registration, yearly software subscriptions, team compensation like bonuses or comp plan changes. Then take a look back at previous years to anticipate when you might see dips in revenue or periods of increased spending. These things are often seasonal. They happen every year, but most business owners still don't anticipate them. Setting aside a cash reserve now can be a game changer, giving you a financial cushion and peace of mind. Don't forget to review your access to credit too. Make sure your lines of credit, business credit cards, or other financing options are up to date and ready to support you if needed. Taking these steps ensures you can navigate whatever the first half of next year throws your way and helps you seize new opportunities when they arise. Armed with a realistic cash flow forecast, you can plan how to motivate and reward your team for the year ahead. That brings us to number 5. Analyze your compensation and commission structure. It's easy to let compensation structures operate on autopilot, but year-end is a great time to assess whether your current plans are actually supporting your business goals. Start by identifying which transaction types or carriers are driving the most profit for your brokerage. Are you investing your energy in the right areas? Should you be focusing on more purchases or refis? Maybe a different product line from your carriers? Perhaps a market segment that recently opened itself up to you? If you haven't already, it might be time to shift focus in the new year. If you're working with brokerage partners, review your splits both up and down the line. Are they fair and reflective of each person's actual contribution? For team leaders, this is also the time to review compensation plans for admins, processors, or junior producers to ensure everyone's being rewarded appropriately and in a way that drives the results that you want. Restructuring or refining your compensation plan now ensures everyone is motivated and invested in the brokerage's success as you head into the new year. Compensation structures are key, but cash in hand is what keeps your business running. It's crucial to make sure you're not leaving any money on the table as the year draws to a close. So, let's make sure the money you've actually already earned makes it to your account. Number 6, review outstanding receivables or unpaid commissions. Uncollected income can quietly eat into your profits, and it's more common than you might realize, especially in fast-paced service businesses. The end of the year is an ideal time to comb through your accounts receivable and make sure you're tracking down every outstanding invoice. From consulting fees to transaction coordination, BPOs, or premium financing, follow up on any unpaid referral fees or downstream commissions that may have slipped through the cracks. Now's the time to tighten up your billing and collection processes so you aren't starting the new year with old money still lingering on your books. Even small amounts can add up over time, so addressing them promptly helps strengthen your cash flow and ensures that your hard work translates to revenue where it counts. With your collections tightened up, now's the time to take a critical look at your offerings and pricing to maximize future earnings. Number 7, optimize your pricing and service models. As markets shift and your business evolves, it's important to make sure your pricing structure truly reflects the value and costs of what you deliver. Review each of your services. Are there opportunities to bundle offerings for more value or create premium experiences for your top clients? For mortgage and real estate brokers, think about whether new packaged services or enhanced client touches could set you apart. Maybe it's time to become a correspondent lender, for example. If you're in insurance, dig into persistency and retention rates to see if your renewal strategies need a refresh. This is also the perfect time to consider adding new advisory revenue streams like financial planning partnerships or value-add transaction services. Even modest improvements to your pricing or service mix can have a major impact on your bottom line as you head into a new year. With your pricing and service models dialed in, you'll want to make sure that your marketing efforts are working just as hard for you and delivering real results. Number 8, review lead sources and marketing ROI. Where are your best clients and deals coming from? Take a comprehensive look at all of your lead sources: referral partners, online leads, paid ads, webinars, classes, content marketing. Evaluate how much business each channel really delivers and match that against the effort and costs that it takes to maintain them. Don't be afraid to trim channels that aren't performing. Double down where you see the strongest results. Those high-converting lead sources should get the bulk of your attention, budget, and energy. It also helps to map out the full client journey from first contact to closing and identify any friction points that slow down or lose potential deals. Cleaning up your approach here is one of the fastest ways to boost your time and marketing dollars as you move into the new year. With strategies in place to fuel growth and strengthen your bottom line, it's smart to ensure that you're optimizing your position when it comes to taxes. Number 9, proactive tax planning with your professional. End-of-year tax moves should not be guesswork. This should be a well-informed conversation with your trusted tax professional. Instead of waiting for tax season to roll around, schedule time with your CPA or advisor now to review your projected financials and current year performance. This collaborative approach allows your tax pro to spot opportunities, minimize surprises, and to craft a strategy that's tailored to your unique situation. Bringing in up-to-date, accurate financial information, especially projections for next year, makes that conversation even more valuable. It empowers your tax planner to get creative and offer recommendations specific to your business, whether it's about entity structure, retirement planning, or timing strategic investments. The main thing? Don't try to navigate complex tax territory alone. Lean on your professional so that you can move into the next year with clarity and confidence. With your tax strategy in place, your final move is to map out a budget that'll keep your momentum strong into the new year. Number 10, refresh your budget for the coming year. Going into a new year without an updated budget is like flying blind. Now is the time to review your revenue goals and align your spending with what you actually want to accomplish. Allocate more resources to high ROI initiatives like referral development, marketing, support staff, or automation that frees up your time. Just as importantly, cut out any unnecessary recurring expenses, those subscriptions or services that aren't moving the needle. A fresh, realistic budget helps you stay focused, measure success, and adjust quickly when opportunities or challenges arise. Finishing the year with a proactive review and actionable plan sets you up to make the most of every opportunity in the new year. Remember, small changes add up. Each step you take now will compound over the coming months. Whether it's tightening up your operations, focusing your marketing, planning out tax and cash flow strategies, every decision that you make now sets the tone for the year ahead. If you want a partner who can help you get all of this done, not just at year end, but every month, reach out to us at Bookkeeping for Brokers. Our team provides bookkeeping, accounting, and fractional CFO services built specifically for mortgage, real estate, and insurance brokers. Imagine how much more you could achieve with an expert financial partner on your team. Schedule a call today to see how we can help you build a more profitable brokerage year-round. And with that, we'll see you next time.